G'day folks, Jim here from FX Charts. Thanks for tuning in Tuesday, December 10th. Well, the euro remains firm this morning, having traded fairly narrowly overnight, and comes despite the fact that there was some softer EU data out overnight, both from Germany and also the EU Centex investor survey was a little bit weaker than expected. But the euro remains near its highs and looks as though it could push a little bit hard during the day. There's little out of the US later on. We've had some Fed heads talking overnight, a little later in the US session, I should say. And while monetary policy remains uncertain there, it looks to me as though the dollar's going to remain under a bit of pressure, at least until the FOMC meeting on the 18th of December. Elsewhere, the yen's under pressure still, particularly on the crosses, but it's also against the dollar. It's up at 103.30. Sterling and the euro are both cracking onto new highs, and look to me as though they're going to be a fair bit more to come from both of those early in the new year, if not before. Sterling itself, that rallied after Mark Carney's speech in New York. He spoke about increased productivity and growth in 2014, and that underpinned cable. The Aussie and the Kiwi, they both remain choppy. I'm probably likely to do so, to be honest. We've got the the Australian jobs data on Thursday, and also the final RBNZ meeting. No change in policies expected there, but a rate hike is very possible in early 2014. So if we go and have a look at the charts here, starting off with the euro. Now the euro is trying to break a little bit higher above our resistance line, but I think that there's plenty of offers in the 137.50 area. I'm told there's some good barrier options there being protected. But having said that, if we go through there, we're like to head on to 137.75 and possibly above 138 to this high up here at 138.30. Don't think we see that today, and I'd be surprised if we did get much above 137.75, particularly as the hourly charts here, although they're making new highs, they're showing some bearish divergence as well. So I wouldn't be getting too carried away on the top side today. Dollar yen, that's what's happening in dollar yen. Well, we're just we're at the moment 130. We're basically at 103.35 at this high here. Now, if that can be taken out, 103.37, and the 4-hour charts are showing there's a good chance of doing so, then we might move on towards this 103.73 high. And beyond that, I don't really see an awful lot to hold it back. There's not an awful lot of resistance until we get up to sort of above 105, but that's some way off yet. And I'd be a little bit surprised to see us break above 103.75 today. On the downside, though, of course, below 103, there's going to be good bids up to 102.5, where we got down to earlier. So I don't think we're going below there, but I still think buying dips is the way to go. Sterling, what happens in sterling? Let me just get rid of blow this up a bit. The 4-hourly charts are they're still positive for sterling, and this high here is 164.40. We're just a little bit below that at the moment. If we do take that out, then I think there's a room for it to move a fair bit higher. And if we need to look right out here to the weeklies, and we go right back here to really, if we take out this 164.40 level, we really go back to August 2011, and that's 165.75. So there's a bit of room on the top side potentially. The daily charts are pointing higher. They are topping out a little bit, so we might fail here at this 164.5 level. In which case we're going back to, and there would be more trade within the 163, 164 area for the time being. But ultimately, sterling looks good and probably remains fairly underpinned given the improvement in the UK data. Swissy, trying to make, I don't know if it's trying to make a double bottom down here or not. It doesn't look very healthy. The 4-hour charts are a little bit oversold, and we might see a bit of a bounce. But going further out, if we look at the dailies, if we do go under here, sort of this, wherever this is, 88.90 I think it is, If we go on 88.70, yeah. If we go underneath there, there's not an awful lot to hold it. Really, there's sort of some down here. There's sort of 80, low 87s, 86 and a half, something around there. 87.50, and then 85.70. So we've potentially got quite a fall ahead of us, and the dailies are looking as though they're potentially headed lower. So just watch out for a break of that 88.70 level. Aussie's just coming off a little bit at the moment. It finished New York at about 91, the figure. It's looking a little bit soft, but I don't think we're going anywhere too far, particularly ahead of Thursday's jobs data. So we'll probably just gyrate around here. There's going to be support at 90.70 again, as there was yesterday. Let me just blow that up a bit. At 90.70. And on the further on downside, 90.50 should support it. If we can get above this sort of 91.20 area, then we might be headed back towards the sort of 91.70, 91.67 was that high here, and 92.03 up here. So it doesn't look like we're going there today. There is a bit of Chinese data out today though, and also the ANZ job numbers will be out shortly. So keep an eye on that. It could be that we're forming a bit of a base here, a shoulder, a head, maybe another shoulder for a bit of a blip higher. The target there would take us back up to about, or I guess about 92.60, 70, which is where the neckline is on the dailies. If we look at, I haven't got that drawn in here, but oh yes, the neckline just there, it's the white line. So we could head towards that, and then I think eventually we'd head lower again, as I've said before. Kiwi, that's just chopping around. Did take out the resistance at 83, the figure 83.10, went up to 83.20 last night. Has come back and it's now just vaguely trying the top side again. Don't really think we're going anywhere too far ahead of the RBNZ anyway on Thursday, so we'll wait and see on that. But I think on the Kiwi though, I'd probably still have a look at sort of 83.5 to 80, 82 is probably the range, and I really wouldn't be too involved. It just looks a bit choppy to me. So that's about it for the moment. As I say, we've got a fair bit of data out from China later on. We've got some Australian data, but that aside, there's not too much, particularly from the States later on. So it could be another fairly range-bound session ahead of it heating up later in the week when we've got a fair bit coming on. So that's about it for me today. Have a very good one, and we'll talk to you tomorrow. Cheers.